Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here's your daily technical analysis of foreign exchange markets. I'll start with the euro-dollar. A bearish double yesterday, if only just. What was interesting was how prices managed to close just under the main supports in recent times. That is, just below the slew of supports that had been pressuring upwards. They are the short-medium moving average, currently 113.27, the lower trend line of the November 2021 to January 2022 ascending triangle pattern, currently at 113.33, and especially the neckline, currently 113.15 of the April to May 2020 reverse head and shoulders pattern. The only one that managed to stay as support yesterday was the interesting 61.8% Fibonacci of the March 2020 to January 2021 move at 112.89. Overall, all the action since the start of the year continues to be reminiscent of a potential pattern build-up, such as a diamond pattern or a cat's ears pattern or something similar. Unfortunately, it is still not that clear, but it's becoming so, and I suspect it may well be a cat's ears pattern, more or less as it develops. So far today, a strong move lower. Below the 38.2% Fibonacci line, the next significant support below the head and shoulders neckline of the July 2017 to November 2018 move, currently at 111.98. These are all now resistances, plus the previous supports mentioned earlier. The next support below is the congestions from June 2020 at 111.67 and March 2020 at 111.39, plus the 2022 low at 111.19. Overall, it's worth remembering this market is still within the significant January to May bearish Andrews pitchfork. We are right now between the upper time overhead, currently 113.66, and the middle time below, currently 109.96. Cable, aka sterling against US dollar. A key reversal down yesterday that countered the previous session's possible hammer pattern. This time the market properly broke the closing support of the lower time, currently 135.5 of the newly drawn early December 2021 to late January 2022 bullish Andrews pitchfork. The next halter that previously highlighted now 3-pointer uptrend, currently at 135.5 from late January. Below these, we have the 2019 high at 135.16, the flatlining medium moving average, currently 135.04, and the rising short medium moving average, currently 134.95. Then the September 2020 high at 134.83, and the lower time, currently 134.59 of the bullish shift pitchfork, for the same move as the bullish Andrews. That actually seems to be now the end of that squishing of the market and a single direction being pushed forward. So far today, well, all those supports are now resistances. What looks like now like a bearish opening long black Mariposa has busted through all the supports previously listed. The bullish pitchforks and the uptrend are now retired. What we are now left with is the middle time, currently 133.93 of the October 2021 to January 2022 bearish shift pitchfork, followed by the 2022 low at 133.55. This also sets up the action for 2022 so far to be a possible bearish halfway hesitation, for potential target X in the 132.60 area. This is just above the key 50% Fibonacci line for the whole of the 2016 move at 132.33. Euro sterling, an indecisive spinning top yesterday, coming as it did after the previous session's interesting and in some ways disappointing combined daily key reversal up and bullish engulfing pattern. The market is still just above the broken but still potent lower falling wedge trend line, currently at 83.27, the old August to December 2021 falling wedge pattern, as well as the congestion at 83.36, which seems to act on a closing basis. A little below that, we have the middle time of the early December 2021 to early February 2022 bearish Andrews pitchfork. This pitchfork has seemingly shown the recent bearish angle of attack quite well, still does. Finally, with just a few days to go, it is interesting to see that we are already set for a possible monthly key reversal in February. If we close on the 28th, either over 8,400 or under 83.50, then we'd be on. Right now we're looking at a possible monthly key reversal down. So far today, well, we're already set up for a daily key reversal for today. If we close tonight either over 83.42 or under 83.36, then we'll be on. Right now we're looking at a daily key reversal down, but barely. The market has dipped down to test the middle time, but it has held up so far. It's interesting to note that. Below that, we have congestion from February 2020 in the 82.99 area, and then the low of 2022 so far at 82.83. US dollar against the Indian rupee. An indecisive doji cross yesterday, which was an interesting choice after the previous session's possible inverted hammer pattern or shooting star pattern type 1 bearish. Overall, up above we have the moving average congestion of the medium moving average currently at 74.83, the short medium at 74.83 also, and the short currently at 74.90. These three were all set up to make a bow tie formation in the next few days. However, things have taken a turn such that it looks like the possible bow tie formation will not happen. Looking further above, we have the broken but important 2022 uptrend currently at 75.10. The reason why this was important was that it triggered up to two patterns, a recent rising wedge pattern, and to look at the whole of the December 2021 action to date being a possible large bearish halfway hesitation. The first one is still active, as we could regard the action of the last few days as a false break lower. However, the second one, the bearish halfway hesitation pattern, is no longer valid. So far today, what looks right now like a bullish long white Mariposa that has broken up over the following. That's all the moving averages I previously mentioned. The August 2020 high at 75.31, the April 2021 high at 75.56. Price is now back within the recent ascending wedge pattern, which has its upper trend line currently at 75.95. Apart from last week's high at 75.72, this will be the next resistance. Just above that, we have a congestion band, 75.96 to 76.14. The April 2020 to date downtrend currently at 76.34. Next above that, we haven't made it yet, but if we see the high of last week, then we are set for a possible immediate countering weekly key reversal up. US dollar against the Brazilian real. The second consecutive bearish opening black Mariposa yesterday, and also a fourth bearish black crow. That made a new low and low close not seen since July last year. The market continues to make its way lower, utilizing the previous support of the interesting 38.2% Fibonacci and the big October 2019 to May 2020 move at 510.87 as a cap on the market. Prices moved down through a fairly clear area to tackle the congestion at 500.99, breaching it and then closing right on it at the end of the day. Over all of this, the market has still kept within the cone of the early January to date declining broadening wedge pattern, currently 518.22 to 476.88. This wedge pattern, as detailed in its name, has been dictating the move lower since about mid-January and still continues to do so. Below, we now have the 50% Fibonacci of the October 2019 to May 2020 move at 496.58 and the 2021 low at 489.02. US dollar against the Mexican peso. An interesting pattern yesterday, a combined bearish engulfing pattern and bearish opening black Mariposa. Not that hard after the previous two sessions were indecisive doji crosses, yet could also be seen as a possible bull hammer pattern. The market nevertheless ended up once again at the middle time, currently 20.2465 of the recently drawn mid-December 2021 to late January 2022 bearish shift pitchfork. Just above, we have the upper time, currently at 20.3740 of the bearish Andrews pitchfork, and the slowly rising long moving average, currently 20.3431. There's also been a possible beginning of a large bearish half hesitation formed since mid-December last year with an initial target X in the 1985 area. However, this is now on the back burner for the foreseeable future. So far today, a strong move higher, up through the long moving average and the upper time of the bearish Andrews pitchfork. However, the market is still within the bearish shift pitchfork, but it's having difficulty staying up over the upper time of the bearish Andrews pitchfork at the moment. Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final bit.